Do I have your attention now? Do I have it? Good. I thought so.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks diverged on Tuesday after China upped the ante in its trade spat with the US while investors digested the kickoff of a third quarter of earnings from Wall Street's banking giants. Now you can see here banks, financials were actually very, very solid, really green through and through, except for JP Morgan. The reason they were in the red had to do with a bankruptcy they're dealing with via their tricolor division. Other than that, guys, very, very solid in the financial space through and through. Tech did take it on the chin. Nvidia, AVGO led semiconductors lower, but the broad semiconductor space was largely healthy. We saw mixed price action here in infrastructure. Apple was down. Google and Meta were mixed. Amazon and Tesla were in the red, and that did lead the indices lower. However, it was green everywhere else. Software was actually pretty positive, along with consumer defensives. The broader consumer discretionary space, industrials, real estate, utilities, energy, basic materials. In fact, every single sector gained here today, except for technology. Technology was down 0.60%. The S&P 500 up 0.23%. So you can see the drag on technology on this right here. However, the RTY, the broad market, was the best performer, up 1.5%. So small caps, high beta, outperforming. And then we saw every other sector gain here today, from energy, healthcare, staples, all the way to financials, which were the best performing sector after those earnings. But it wasn't all good news all day. You can see right here that for about half of the day, stocks were actually deep in the red. It was only at about midday when stocks actually turned positive. And now we're looking really, really positive, and the market really, really liking those earnings from those big banks. And I think that is part of the reason why we actually put a bottom in here and go. I think analysts are saying, hey, earnings season is going to be very, very good. And investors bought the dip that they got in the morning. You can see that the broad market really outperformed it today, especially in the core and value segment of the market and in mid caps and small caps. But we did see participation in value and core in large caps as well. Large cap growth was slightly in the red, but not disastrous, just down 0.06%. And then we saw mid cap and small cap growth underperform their value and core counterparts, but still green nonetheless. And another reason, apart from big bank earnings, why stocks were actually green had to do with Jerome Powell. The Fed Chair came out, had a speech, and said that his outlook for employment and inflation had not changed, implying that further Fed rate cuts are possible. He also said downside risks to employment appear to have risen, implying more Fed cuts are possible. Right now, the Fed plans on cutting 2 more times this year. His words may have sparked a bit of a rally for the fact that we may get 3. But the reason why stocks were red early on in the day is that we got more escalation in the tariffs. China sanctioned US units of a South Korean shipping company which is partnered with the US on Tuesday, and Beijing has promised retaliatory measures on the industry in the latest tit-for-tat move over the trade and tariffs. The sanction target 5 US units of Hanwha Ocean Company, helping fuel a global slump in equities as traders grow concerned of the escalating tensions between US and China. However, that slump, that dip, at least in US stocks, was bought. Nonetheless, this is still going on in the background, and right now this is one of the biggest risks we still have in this market. You saw what happened Friday. Trade tensions are alive and well. Bessent came out, made some comments on China. He said China is trying to damage the global economy. China's economy is weak and they want to pull everyone else down with them. Nonetheless, investors somewhat ignoring these risks for now, buying the dip on earnings. Now, let's quickly talk about some of the names we saw. Johnson & Johnson announced its earnings, actually really good results. The stock was roughly flat, slightly down ever so slightly after it reported adjusted earnings per share of $2.80 compared to Wall Street's estimate of $2.76. Pharmaceutical sales rose 6.8% year over year to $15.5 billion, while medical device sales also rose 6.8% to $8.43 billion. Oncology treatment sales hit $3.67 billion, and Johnson actually raised its sales forecast. So we got a double beat here and a raise. It raised its revenue forecast about $300 million to a range of 93 billion, 0.5, above the analyst expectation of 93.4 billion. Johnson & Johnson also planned to spin off its orthopedic business on Tuesday as the company reported better than expected earnings and raised its 2025 revenue guidance. So a really, really solid report here from Johnson & Johnson. The market's still digesting everything in this space, and pharmaceuticals are not a very well-loved sector at the moment. JP Morgan Chase, probably the biggest bank in America, posted net income of $14.4 billion and a 12% increase from the quarter last year, roughly $1 billion more than what analysts were anticipating. Revenue grew 17% year over year to $2.6 billion, while client trading jumped 25% to $8.94 billion. Jamie Dimon said the U.S. economy remained resilient in the quarter, and the reason why the stock was down had to do with the tricolor bankruptcy they are dealing with. BlackRock, really, really solid results here today. The stock was up 4.19%, and that's because revenue grew 25% to $6.51 billion from a year ago. Analysts were expecting $6.2 billion. BlackRock's EPS for the quarter was $11.55, beating the expectation of $11.24. Assets under management topped $5 trillion, with $205 billion coming in this quarter for assets. And then AMD was up 2.9% after it announced a deal with Oracle to provide its cloud business with 50,000 AI chips. So AMD seeing a lot of activity, and cloud providers definitely want AMD chips along with NVIDIA chips. And then for everything we saw today, guys, there were 4,300 advances, 2,000 decliners. We saw net inflows in the New York Stock Exchange and the Nasdaq 100. The S&P 500 just flat, but we do know the broad market was outperforming, and we are starting to see signs of life in market momentum. We've retaken the 5-day right here. We lost it last week. Still looking a bit sickier for the 20 and 50-day moving averages, and our longer-term averages look really, really solid. All in all, we have our longer-term averages and our shorter-term averages looking really, really good. It's just time for the medium-term averages to catch up. Now, guys, looking at the charts, you can see somewhat mixed price action, fairly green in the broad market. Look at the RTY, look at the equal weight, look at mid caps, look at profitable small caps. Very, very solid. The S&P 500 hanging in there, just in the green. The Nasdaq 100 is on the flat line, and that's obviously led by selling in NVIDIA, AVGO, Microsoft, as well as Meta, Tesla, and Amazon. So that is really letting the Nasdaq 100 down, but still flat for the day. Nothing crazy, but really today was a broad market sector rotation. You could see out of large caps into the broad market. Very, very solid stuff. European stocks, international stocks weren't that great. So again, we're probably seeing a rotation out of these European stocks into other stuff, right? I mean, they were broadly red except for Middle Eastern stocks. Crypto actually down here, as you can see, down 1.64% for Bitcoin, 2.6% for Ethereum. The reason this is down, at one point, this cryptocurrency, Ethereum was down 5% on the day. Bitcoin was down 1.67%, was down 3% on the day. We'll talk about it when we get there. Volatility ticked up ever so slightly, so there is still that uncertainty underneath this market. The 2-year and 10-year yield fell after Jerome Powell's comments along with the dollar. Obviously, more rate cuts, you're going to see yields fall. And that's actually what we've been saying for the last couple of weeks. We think we're going to see 10-year below the 4% mark very soon. Gold is up 1%. Silver down, but it needs to take a breath. Silver, absolutely crazy what's happened in the space. Crude oil continues to slip as crude oil glut expands. Just a lot of oil in the system right now. And TLT bonds gained up 0.32%. Now, this is the weekly chart of the S&P 500. And if you look at the week, right, you could say, yeah, we had a pretty crazy. And if you look at the week you could say, yeah, we've had a fairly average week. Buyers came in and bought the dip after, that massive sell-off on Friday. But then we hop on the daily chart, we could see some very, very interesting things. Number one, it's the tariff tantrum lows right here, and us absolutely moving to the upside, making higher highs, higher lows into all-time highs. That's an all-time high right there, guys. However, when you look at what's happened, Friday, we had this massive, massive sell-off right here. Then yesterday, Monday, we pair a lot of those losses, right? And then today, we actually moved higher here in the S&P 500. However, not without some volatility. We actually retested these lows early on in today as China escalated the trade war with Hanwha Shipping Company, right? However, buyers came in, bought the dip, and now we're actually trading higher than yesterday's high. So dip buyers came in very, very strong. The sellers having no conviction. If we actually just go to the 1-day chart, you can see right here, we slipped and then we absolutely rallied. And now we're sort of just digesting the move here at the top of this range. We probably will close the day at these highs right here for the S&P 500. So you're looking at that's going to be what the day is for the S&P 500. We might have a little bit of an impulse up, a little bit of an impulse down, but the majority of the move for the day is already done. But absolutely crazy. And this is actually really, really solid because dip buyers came in as sellers tried to take us lower, and that could not happen. So ultimately, this is very, very solid. And I do think we'll probably continue to have price discovery all the way up to those highs in the S&P 500. And Nasdaq 100 not looking quite as solid. You can see right here, trading below yesterday's lows, pretty much flat, I would say. And at about the midway point after Friday's sell-off, bears need to step in right here if they want to take large cap tech lower. But it does look like bulls are rotating from the large cap space into the broad market, because when you look at the Russell 2000, that's an all-time high, guys. That's an all-time high for the Russell 2000. When we look at the RSP, the equal weighted S&P 500, not an all-time high just yet, but we're really coming at the highs that we saw on Friday after that sell-off. When we look at mid caps, right, above the highs we saw on the Friday sell-off. Look at the dip that's just bought here. Look at these wicks, guys. Absolutely insane wicks. And then when we look at the SP 600 above the Friday sell-off high, which was right there. So, the broad market actually looking really, really strong, pairing a lot of the losses that we saw Friday and moving higher, especially the RTY. That's an all-time high, guys. Absolutely insane to see what this market is doing. Now, let's actually go to our higher beta assets. Now, when we look at Bitcoin, it's not acting super well, down 1.63%, but you can see from this wick right here, it was down significantly more, back to the 1 of 9,000 area at one point. Ultimately, guys, I think if we hold this 109,000 area, right, I do think that this is where we're going to springboard for us to move higher into 2026, into Q4 for Bitcoin. Looking at Ethereum, looking a little bit stronger here than Bitcoin. We're simply just bouncing off the lows right here, off this trend line. You can see we did have quite a bit of a wick at the lows, but we couldn't retrace it and then some, like we saw with small caps, like we did with the S&P 500. We're trading below the highs we saw yesterday. And the bulls really do need to step in, especially above the 4,000 mark, to take us higher right here. But the only thing Ethereum is doing right now, if you look at it, right, Ethereum, if you take a measured move from these lows right here to the all-time highs, is up 268%. What Ethereum is doing is just digesting this big move in very wide trading range, because it is a volatile asset. That's simply all this asset is doing right here, is digesting a massive 250% gain peak to trough. Now, guys, let's look at the 10-year yield. You can see we are trading at the lows here when we had the FOMC. That's a good thing. I do think the 10-year yield is probably going to go lower. I think we're going to see a 10-year yield below the 4% mark. The 2-year yield at 3.4%, below the 3.5% mark. We may actually continue to see this move lower. I do think that is the case. The dollar actually seeing a little bit of strength. We've been saying that. We've been bullish on the dollar, contrarian against the market. And I do think we are going to continue to see the dollar move higher. I think we're going to see 100 DXY before the end of the year. If you guys are struggling to find places to put money, look at TLT. This is a great place to put your money. If you're looking at individual stocks, I still like BMNR. I do think crypto and Ethereum as a whole are going to rip to the upside. BMNR was down 4% today, right? I do think that this is a great place to buy, looking for the highs here of 64 and potentially the highs of $71 in 2026. We probably will go ahead and reach those all-time highs. If you want a Bitcoin treasury, micro strategy, or strategy as they call it now, is where you want to be. Sitting at the lows right here, I would not be surprised if we see these all-time highs by the end of the year. As it pertains to macro strategy, I do think this is a great buy, especially very, very long term. Guys, and diving into sentiment, we continue to remain in the fear zone here after that sell-off. Yes, we had a rebound, but we haven't rebounded back to the highs prior to Friday. So we're still in the fear zone, but we have pushed from the tipping point here of extreme fear into fear. That is a good thing. Ultimately, the longer we stay in this zone, and if we do push into extreme fear, this is where we want to buy for a Q4 rally and a 2026 rally, because we know factually that when we get rate cuts, and we currently are getting rate cuts, stocks tend to do well, especially if there is no recession. We tend to see returns upward of 15% 52 weeks later. If we get a recession, that's when things look a little bit less good. However, I don't see a recession coming, and earnings are very, very solid. We're looking at 8.8% earnings growth this earnings season, 5.9% revenue growth. And if you exclude the energy sector, 9.6% earnings growth. Very, very solid stuff so far. And I personally don't think we are going to get a recession, because when we look at Q3 GDP now estimates sitting at about 3.8%, that's not recessionary. And when we look at federal employment tax receipts, we're seeing nearly 8% growth on a year-over-year basis, coming from really tough comps as well. Tax receipts look strong, and that means the labor market is likely strong as well. Earnings season is officially here. We had some of the big banks report today. That continues tomorrow with Bank of America, Morgan Stanley. We also get ASML, and we'll look at the rest of them for the rest of the week. In terms of data, the big data print that we're really looking for this week is CPI and PPI. That's on Thursday. Retail sales as well, but we'll see if we get that data point, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.